All right, I think everyone from the weight room is in, and we always have a bunch of people that come in. This is the Vancouver thing. Everyone shows up 5 minutes late to be on time. I'm totally that person too, so I have no judgment here. I'm only on time because otherwise you'd all be like, "What? Where are you?" So, anyways, my name's Angie Schick. I am the director of New Ventures BC, and we are the runners of the New Ventures BC competition presented by Innovate BC. So we have a session today as part of our annual weekly seminar series, and today's topic is on SR&ED, Don't Leave Valuable Tax Incentives on the Table, and it's presented by our longtime supporters and partners, EY, and part of their SR&ED team. So we have Rod, Mo, and David here who are going to take you through an info session all about SR&ED, and we'll have lots of time to answer questions as well. And I always say, even though EY is a really big four company, they do work with quite a few startups and early stage companies. So definitely we like to have these sessions just so you can kind of get to know the team and understand the work they can do for you. Okay, so I'm just going to thank my sponsors and then I'm going to pass it over. So again, if you happen to be new to New Ventures BC, we're a not-for-profit. We work with BC tech startups. We have our annual competition. We also have accelerator program focused on mentorship. We have a sales accelerator program that's open for applications now. And we have a lot of online education as well for startups. So if you are starting a company, come on down to newventuresbc.com. There's something for you. And our sponsors for the competition, our title sponsor, Innovate BC. Our gold sponsors, as I mentioned, EY, who's been with us for the entire 22 years, Fasken, SFU Beauty School of Business, UBC Cider School of Business. Silver sponsors are Acetech, TELUS Ventures, Output, Bantech Angel Network, and Volition. And we also have our wonderful bronze sponsors listed here, who are lots of great service providers and accelerators for the tech industry, and our media partners. All right, get in touch with us this way. Otherwise, that's it. I'm keeping my intro short because a lot of you probably heard it yesterday. So I won't bore you again. So I've unshared, so I'm going to let the EY team share their presentation. And I think Mo is starting it. So again, Mo, David, and Rod are here from EY, and I'm going to pass it over to them. Thanks again for being here.
Awesome, Angie. Thank you so much. Hi, everyone. My name is Mo, and I am a senior manager, part of our EY SR&ED practice in Western Canada. I'm located in Vancouver. I've been with EY for the last 12 years, and I lead our IT practice. My background is a computer engineering, so I mostly deal with like IT tech companies that we do their SR&ED claims in the West. I have with me Rod. Rod is an accountant, actually, and he has been at EY for many more years than me. Rod, how many years have been here?
I'm about 20 years right now.
Wow, that's amazing. And he's a director, and Rod usually deals on the costing side of SR&ED practice, but at the same time, Rod leads our capital asset review in Western Canada. So he has a lot of like clients there as well. And we have David. David has extensive experience on software development, but at the same time, he leads our biotech practice in Western Canada as well. So today, as Angie mentioned, we want to have like a quick presentation about SR&ED, what it is, why you need to apply for it, what's the benefit. And to be honest, if you want this to be useful for you guys, like you want to make it like as interactive as possible. So at any point, please interrupt us, drop us like the question in the chat, or just interrupt us, come out of mute and ask any questions, and we are more than happy to answer during the presentation. But if you prefer to wait all the way until end too, and then ask your questions there too, we have like a sections for QA at the end of the presentation too, right? So I will leave it up to you. All right, so SR&ED, as you probably know, it stands for Scientific Research and Experimental Development, right? And the agenda for today is what we want to talk about is like, what is the SR&ED program? Why you want to claim for the SR&ED? What are the eligibility criteria? We're gonna go through some examples of SR&ED projects that we have seen. and that CRA has gone through like audits and they haven't accepted them. The examples that we see in the industry these days. And then we will have like a QA section, as I mentioned at the end. So what is the SR&ED claim for SR&ED program? SR&ED is a federal tax incentives. It has been around since 1986. The purpose of the program is to promote innovation in Canada and create jobs. So you will require to do the job in Canada, do the development inside of Canada to be eligible for the incentive program. And that's why Canada created this program to avoid sending all the jobs to overseas, right? It is a $3 billion program every year, and the last like static is like last numbers that we got from CRA, around 25,000 companies apply for it. It is very generous, in my opinion. We have seen a lot of like even foreign companies coming to Canada just because of this program as one of the main reasons. The other reasons could be like using our talents, hiring. It's a little bit cheaper, especially from US when they come here and do the development here. But like, again, one of the most generous tax incentives program for R&D, in my opinion. And people like, and the companies can receive tax credit that can be refundable in sometimes based on your company structure, federally and provincially. So there is a federal portion and provincial portion, and we leave the costing side with Rod since he's way more knowledgeable on the costing than me. All right, so Rod, do you want to talk about why people want to claim for SR&ED and what are the costing benefit, please?
For sure. Thanks, Mo. So before I do that, as Mo said, so my background is not engineering. I am an accountant, so I'm a CPA by background. So I deal with the financial and the tax side of this program and amongst other things. But so really, I think this is a pretty key slide because this is why you're here, right? So why are you going to bother to claim this program in the first place? And the reason is the tax credits that it provides. So if you are a CCPC, and that, by the way, stands for Canadian Controlled Private Corporation, for those that don't know, basically meaning a smaller Canadian controlled company. So not a public company, not a foreign owned, but a smaller Canadian controlled. That is really the type of company that this program heavily targets. And you can see that by the first bullet point there. If you meet that definition, you get a 35% federal tax credit, and it is refundable. So whether you owe tax or not, you get 35% back federally. If you don't meet that definition, so if you're a public company or if you're foreign owned, for example, that credit drops to 15%, so a pretty significant drop, and it becomes non-refundable. So then it's used to offset taxes that you would otherwise owe. So if you don't owe any taxes, those credits just kind of sit there. And I'll talk about that a couple of bullet points down. But the key there is if you do meet that CCPC definition, which I suspect a lot would, it's a key. It's a high rate and it's fully refundable. So in addition to the federal, almost every province, not all, but almost every province also has provincial components for SR&ED. Most just piggyback off the federal in terms of what qualifies. But BC, for example, offers a further 10% tax credit on top of the federal 35. So, and I know 35 plus 10 is 45, but one grinds the other slightly. So if you combine them together, you're looking at about 42%. So if you're a CCPC in BC and you're doing eligible SR&ED, you're looking at about 42 cents on the dollar that could come back as a result of claiming one of the credits. I see a question just popped up, so I will answer that in a second, but I'll just keep going here. The third part there is, as I talked about, if you're not a CCPC and the credits only offset taxes payable, you won't lose them. You can carry them back to offset taxes you've already paid 3 years, or you can carry them forward for up to 20. So as long as you're taxable at some point in those 20 years, you can use them. The BC component, for example, can only carry forward for 10. But there are those provisions to carry them forward. Mo talked about the next one, which is basically that it has to be undertaken in Canada. And that's pretty much, I would say, key point number one about this program. As Mo said, the incentive here is to incentivize companies to do innovation and R&D work in Canada, to create jobs, promote the economy, all that kind of stuff. And so they want you to undertake the work in Canada. Even if you're a Canadian company, if you undertake it somewhere else, well, with small limitations, but generally it has to be in Canada. And another really key point is the filing deadlines. This is a tax credit program, So it does get filed with your federal and provincial tax returns, which is why guys like me get involved. And basically, you have to claim it within 18 months of your tax year end. So whatever your fiscal year end is, you have 18 months to get that SR&ED claim into a tax return and filed with CRA. And that is a hard and fast deadline. There are no exceptions. If you miss it, it's done. And I will answer the one question. I don't see it right now, but it did pop up on the screen there. I think it was asking if Alberta is one of the provinces that has provincial SR&ED. Alberta did have a 10% provincial SR&ED program up until, was it 2020, I believe, Mo? Alberta no longer does. So the Kenney government a couple of years ago scrapped the provincial SR&ED program in Alberta. They do have something called the IEG, which is I might get this acronym wrong, Innovation Something Grant. But it's not SR&ED, but it kind of relates to SR&ED. So if anybody's interested in Alberta, let us know and we can dig up some more information. It's not part of this presentation, but there is an innovation grant in Alberta.
Absolutely. Thank you, Rod.
Yeah.
Perfect. So as Rod mentioned, you guys are mostly CCPC, and I've had asked that question like so many times that when you get the check, do you have to invest it on your R&D? You can, and I guess like CRA is like really looking forward to that and hiring more. But like I've had clients that they went and bought, I don't know, a boat or something. So you get a check, you can do whatever you want with it. So, and that's the beauty of like having a CCPC and more enhanced rates that you get. So let's move on and talk about like the technical portion. So to be eligible for the SR&ED program, right, you have to meet 3 criteria. That is, which is through 2 requirements. And so let's talk about like historical way. So CRA started it with like 3 criteria. They went to 5 questions, and recently they changed it to 2 requirements. But the law hasn't changed, right? So when you look at like the tax return, like there are 3 boxes that you need to fill. And these are like the 3 sections that we're gonna go through. So I'm gonna go through the 3 sections, and I will let you know how it is related to the new requirement, which is why and how that just got published, I think, like if I'm not mistaken, around like 8-9 months ago by CRA. So the first criteria that you want to meet is technological uncertainty, right? That is asking you why routine and a standard solution was not able to resolve the technical problem that you faced. Why did you need to advance your technological knowledge to be able to complete your project, right? So basically what this is asking is why this is going beyond available technology, right? So you want to make sure that you can showcase like what is available in the industry right now and how you are going beyond that, right? And that is the first criteria. So technological uncertainty and obstacles, right? That is going back to the why requirement, right? So basically why you need like new knowledge, why you need to go beyond what is available to be able to deliver the projects that you are working on. The second one is systematic investigation. This is going back to the how requirements, right? So CRA is asking like, now that you established, you have a technological uncertainty. And just by the way, we have had these questions a lot. The difference between technical uncertainty and technological uncertainty is technical uncertainty you can resolve it by using like routine and a standard solution, by using like the knowledge that is available in the industry. It becomes technological uncertainty when you can prove that this is not solvable by something like by your knowledge and what is available in the industry, right? So CRA says like, okay, so now that we understand like you have a technological uncertainty, how did you come about resolving it, right? And that goes back like to the how requirement. They want basically the applicant to systematically go about like resolving the issue. So that means that they have a hypothesis at the beginning, then from that hypothesis, a prototype hopefully get delivered and developed. From that prototype, you do some testing, and from that testing, hopefully you learn something, right? And then you go back and change your hypothesis, which change like the prototype eventually, right? So the more and more of these, this is what we call iterations. The more of iterations that you have, the better chance that you have to prove to CRA that there is that level of uncertainty about like the project. And this is not routine and a standard, because if it was routine and a standard, probably you would be able to resolve that issue within the first iterations. But now that you can show that, hey, I had like 5, 6, 7 iterations, that is for justification that this is not routine and a standard, right? You guys as an expert, you could not resolve in the first approach. And the last one, which is again like based on the why requirement, is technological advancement. And to be honest, we get these questions all the time, like, is success or failure really matter here? And no, it does not really matter. What it is asking you is like, what did you learn by going through all these technological uncertainty that you faced during the project and going through all these iterations that you guys had to go through, right? So basically, this is talking about your learning. If you were able to resolve the issue next time that, let's say, you deal with that much amount of data and you want to deliver like a real-time response time, you know how to do it. If you are not able to, at least you know what not to try next time, because you know the approaches that you took and you know they did not work out, right? So these are the 3 requirements, and I'm gonna go to the next slide because basically visually show you guys like a process of an R&D, like and how it starts, like and at what point you will have like a SR&ED eligible project. To be honest, like with the last 12 years that I've been doing with dealing with SR&ED, like no company came and said like, you know what, there's a technological uncertainty in the industry and I want to resolve it. Like it always starts from a business issue, right? So you get like a business like project from somebody and then you start working on it, right? And you can see like if a standard development was able to be utilized and you were able to deliver that project without any issue, that's perfect. You did not waste any time, but you would not qualify for SR&ED. Let's say you had some technological limitation or technical problem, right? And you went back and you researched about it, you Googled, and then you found like, oh, somebody else had that issue and there was a solution available in the industry, right? Or you went back to books or whatever, and then you were able to find the solution internally or like by reaching out to forums, other places, and find that solution. Then that means that this did not become from like this technical issue didn't become technological issue, right? So you were able to resolve it with available industry knowledge. So that is still not qualified for SR&ED. But if due diligence, so basically available knowledge, was not able to resolve the technical issues, then that becomes a technological uncertainty, right? So that is the first phase, like that you can prove that that technical problem is not only bug fixing, this is going beyond what is available in the industry, and it's a technological uncertainty. And then we go back to that systematic investigation. So the how section, basically, you go through this loop more like many times until you give up or resolve the issue. You come up with a hypothesis for resolving that problem. Based on that hypothesis, you develop like a prototype. And then from that prototype, you do some testing. You see if that issue that you had like you were able to resolve that issue. And if you were, then basically that's your learning. If not, you would go back and learn something from the first prototype and mention that, and then you go back and change your hypothesis, right? You can deviate from like the initial solution completely, or you can modify that hypothesis and then maybe change a little bit on the prototype. So both of those would qualify as a new iteration. Again, as I mentioned, more and more iteration that you want to showcase, and we call it to box 244, which is like a systematic investigation, which you have only 100 lines to describe it, the better chance you have to prove to CRA that your project qualifies for SR&ED. And you actually meet the how criteria and requirement. As I mentioned, the last criteria was technological advancement. So after you went through all these like loops and all these like iterations and systematic investigations, we call it, then hopefully you have some learning, right? So you learn like what not to try, how not to deal as a solution for your problems. And if you were able to resolve the issue, you know the solution. So next time, let's say if you have, I don't know, like a gigabyte of data that needs to be processed in real time and deliver the results like in real time to your users, and you have like, I don't know, 10,000 concurrent users, you know how to deal with it. You know, the kind of like the database structure, you know, like how to search within that. So you know the solutions, and that's the knowledge that you're getting. And again, if you completely failed and you gave up, that's gonna be okay as well. I want to pause here because like, again, like if there's one sections that you want to really focus on the technical portion, that is it, right? These are like directly correlate with the 3 boxes that we have to create as far as your technical writing for your SR&ED project, that, as Rod mentioned, goes to your tax return, and basically correlate exactly by these 3 sections: technological uncertainty, systematic investigation, and technological advancement. So I want to pause and see if there is any question. And I am going to bring up like the chat. I think we have a couple of questions in the chat too. All right, so we are producing plant-based food, and we are elaborating a special dug, which must a special characteristic. This will be done with one of the USA for food processor deal fine food. Absolutely. So absolutely. So there are a lot of like claims for food industries as well. I don't deal with it myself, but like we do deal, like our engineering team deal with a section of our engineering team deal with the food industry. And if you want to make like the taste change, like if you want to make it like last longer, these are all scientific like methodology that you have to use and experiment with. And as long as, again, this applies to any kind of industry, as long as you can prove that there was like that uncertainty about like, oh, how long we can keep this food, or what ingredients we have to use, right? And then you can show that there was a process of experimentation. So you had like a few prototypes on that, and then you can prove like you learned something at the end, you can qualify. Like it doesn't matter what kind of industry you are in. The other questions that we had, we're building charging stations for the city. How does this apply? So charging a station can qualify as far as like electrical engineering as well. Like if you have like issues with like, I don't know, heating up, for example, if you need to come up with like a way to dissipate the heat, like if there's an issue with the limitation of the currents, for example, that you have to deal with. Again, with any kind of industry, if you had a technological uncertainty that you research around and you can find like no solution for it, and you have to do some experimentation, like prototyping, those kind of things. As soon as you can see like there are 3-4 prototyping that you developed and there were some failures, good indication that your project could qualify for sure. All right, and then we have another questions on the chat, and please come in and ask your questions as well on voice. That would be easier, but I will keep reading. Will a space or environment for development new technologies qualified for SR&ED? Space or environment, what do you mean exactly? Or clean room? Can you elaborate on that, whoever asked that question? I think that's Ali Rahmani. If you want to come out of mute and then ask your question, that would be great.
Hi, Mo. So
Hello.
the clean room, basically we are a pharmaceutical company, clean room for developing pharmaceutical products.
Okay, so I think that's a better question for David, to be honest. David, would you want to take that one?
Yeah, so I believe that could be I believe that could be partially claimed as overhead, because if you can showcase that part of the clean room is specifically attributed to the SR&ED work, then we could potentially have a SR&ED position for claiming that as overhead.
Also, the basically expenses to build the clean room ourselves with the new technology, does that considered as like eligible expenses?
You're jumping on a couple of slides ahead where we're actually going to go through some of the costs, so I can probably better answer it then. Yeah. I think, but I'll just kind of say off the outset, typically, now there's always caveats and things like that depending on the situation, but buildings, for example, are excluded. Rent is excluded. So if you're renting a space, for example, the cost of that rent you cannot claim. Capital assets are also excluded. So again, buildings, physical equipment, things like that are typically excluded. However, prototypes and things like that, as you can see on the screen here, are eligible. So it can get kind of gray. So we can certainly send you some additional information that might help answer your specific case. But I would just say that typically things like buildings, rent, capital equipment, things like that, typically generally wouldn't qualify, unless, as David said, there might be some angles to get them into overheads and things like that.
Sounds
And
good.
And perfect. And again, like in building that, if you are building like some materials, again, my background is IT, sorry, but like if you have like some technical uncertainty and that becomes like a technological uncertainty because like nobody has done it before, it's very unique in that situation. And then you develop like some prototype for that clean room and then maybe some of them fail. Absolutely. Again, like it doesn't matter what industry you are in, there is a potential for claiming that development, right? But as far as like the cost, what cost can qualify, I would wait until like I think 1 or 2 slides later, and then Rod gonna talk about those as well. All right, so we have a couple of more questions in the chat, but we have like a couple of hands up as well. So, Chad, do you want to ask your question, and then I will go to the chats later.
Yeah, I also put this in the chat. I think it's mostly for Rod. It's about if we have employees in 2 different provinces, I would assume that the rules of the province that each employee is in apply to those respectively. Is that more or less it?
Yeah, basically. So in the same way that the federal government requires the shred to be performed in Canada, the different provinces require it to be performed in that province. So depending on where your employees are employed from and where they're doing the work, then generally, yes, that's how it would work. Yeah.
Thank you.
All right, I saw one other hand, but I think that could. Oh, we do have another one. Mostafaei, go ahead, please. And you are on mute, but.
Hi, everyone. Actually,
Hello.
I have a question about, we are making innovative platforms to be able to make highly customized, healthy, like nutritious meals. And we have to work on like the technology in the applications and the systems and the meals and everything. Whatever we do is about like researching and changing everything. How we can actually apply for this kind of stuff that we are doing.
For sure. So I'll tackle it again. Like my background is not food industry, but I'll tackle it as much as I can. So most of it, like it depends. You mentioned that you have to research, and that's a good indication that there is a possibility of a shred claim for you, right? But like you have to go back and see why you are researching. Is it because like the knowledge is not there? Is it because like the prototype that you developed, like it failed, right? It didn't meet like the requirement that you had, right? It didn't meet like the requirement like the client had, and then it was like technically failed and you have to research and come up with a better product, right? If that is the case, right, and you have like you have uncertainty about like, can I build this, right? Then that is a very good case for shred, because there's a good chance that you can prove that this technical issue that you have became technological issue, because like the routine and standard solution, which is kind of like when you research and then find out like if what is available, when you talk to other engineers or other food scientists or whatever, right? When you even like rely on your background, background knowledge, when you can prove that, you know, none of these worked out and you have to do experimentation to deliver a product that you are looking for to develop, then that is a good chance that that project could qualify for shred. Hopefully that answers your question, Mostafaei.
Yep, that was good. Thanks.
No worries. So I see a few other questions as well. So I think Lynn asked about like the company that decide to build rather than buy. Oh, absolutely. Okay. So that's actually a great question. So we get asked this question all the time that, hey, you know what, like this product exists, but I don't want to buy it and I want to actually build it myself, right? I always give this answer to my client, like, let's say Apple came up with the first like touch screen phone after like the Nokia, and like it was like a smartphone for new generation. And then Samsung wanted to just copy it, right? CRA doesn't come and ask you like, hey, like Apple has that, why don't you use Apple, right? Like they don't do that, right? If you decide to build something yourself rather than buying the product, absolutely. And usually these companies, they don't publish their like IP or the knowledge, right? And because of that, you can easily prove that that knowledge is not available in the industry if you search for it, right? So for example, I remember that Apple had issues with cold, like when it was like I used to be in Calgary and it was like -40 and like like your touch screen wasn't like effective at that point, right? And they resolved it, right? But if Samsung has the same issue and they decide not to use like their like Apple's technology, pay them to get their knowledge, and they just want to do the research and come up with their own solution, absolutely, like because that solution is not available in the industry, that is a technological uncertainty, and all the iterations that they go through can qualify for SR&ED. I hope that answers your question then, but please come like off mute if you want to ask further question. That was a good question. We get asked that question all the time too. What about if we are co-founders not getting paid for development? Oh yeah, so that's a good question as well. Unfortunately, you need to have cost to be able to apply for SR&ED. If you do not have cost, unfortunately, because you're not paying like any like a tax, like, and there is no cost associated for your development, you cannot apply for SR&ED. There isn't 180 days rule, Rod. I don't know if you want to touch base on that. If they don't have like, let's say, money at this point, and within 180 days next year, they basically pay themselves, I think they still can claim for SR&ED. Am I correct, Rod?
Yes, kind of. So basically, because this is a tax credit program, like I said, and it all flows into a tax return, there has to be an expenditure, as Mo said. And so what that means, obviously, it means you have to spend some money. So there has to be an expenditure, but there also has to be an expenditure from an accounting perspective. So in the books and records of the company, and then in your tax return, there has to be an expense to be able to claim it. If there's no expense, then there's nothing there to claim. Now, you can, as long as you've recorded an expense in the year, you don't have to pay it in the year. You have 180 days, so 6 months after your year end to actually pay that cost. But you still have to have recorded it in your trial balance, general ledger, in your accounting records. So hopefully that makes sense. You have to record it, but you don't have to pay it until 180 days after year end. If you haven't paid it by 180 days after year end, it becomes ineligible.
Awesome. Thank you, Rod. Rod, the next question is actually on the costing side as well from Arjun. Do you want to go to the next slide and answer that later, or do you want to tackle it right now? It's about capital equipment cost.
We can actually, why don't we slip, if we're done with this slide, why don't we jump?
For sure. So let me just see if there's any other technical question. And then if the technology exists, but it comes from a foreign company then would it qualify for SR&ED for a Canadian company to develop that domestic capability through R&D? Absolutely. Again, like that goes back to the examples that we were talking about, like between like Apple and Samsung, right? Again, like it doesn't matter if it is a Canadian company that has the knowledge or a foreign company that has the knowledge, right? If they don't publicly publish their, like basically their IP, their solution, right? And you can prove that this is going beyond available industry knowledge, right? Because they did not release their solution. That technical issue becomes technological issue. And as long as you have the iteration, then you can qualify for SR&ED. Karen had another question. Can you apply for SR&ED if your costs are not related to development salaries, apply to other expense related to development?
And Mo, I think we'll answer that when we get to the next slides.
All right.
And if not, we can clarify then.
Awesome. All right. So I think that's for you, Rod, about what cost qualifies.
Great. So I'm hoping this slide and the next couple help answer some of these questions. If not, please feel free to keep asking questions, and we'll clarify them as we go. So these are in general, the types of costs that you can claim. So keep in mind when we're talking about any of these costs, expenditures, they have to relate back to the technical and technological work that Mo has been describing, right? So if they don't relate to that, then we can't claim it. If it relates to some other aspect of the business, that's no good from a SR&ED perspective. It has to relate back to the R&D work, basically. So the most obvious one is salaries and wages, and that's salaries and wages of your Canadian employees. So they have to be a T4 employee of your company for that to qualify. The first couple of bullet points there just distinguish between the specified employees and non, and really the distinguish there is a specified employee is an owner. So the specified employee is somebody that owns 10% or more of the outstanding shares of the company. If there is such a person, there's special rules. So for example, as it says here, you cannot claim bonuses for those people, just the base salary, and there's certain limitations on the amounts you can claim, but they're still eligible, just with certain limitations and caveats. Non-specified employees are basically everybody else. So anybody who's not an owner or doesn't own any more than 10% of the outstanding shares. There you can claim all their costs. So you can claim base salary, bonuses paid in the year, taxable benefits, all of that sort of stuff that rolls up into an employee's T4. That can be claimed. Overhead is closely linked to salaries, depending on which method you choose. So there's, as it says here, there's 2 methods that you can choose to claim overhead. You have to choose a method each year. You can switch it up from year to year, but when you pick a method, you have to pick it and apply it to all projects for that year. And so the traditional method is basically where you have to itemize your overhead expenses. And those would be defined as anything that's directly related and incremental to your project. So energy costs, or really pretty much anything that's incremental to you having to perform the work. You typically see this used in bigger, heavy industry type files and claims. So for example, we do a lot of work in mining, oil and gas, forestry, where they spend a lot of money on energy costs to run plants and mills, or on drilling costs, things like that, right? Where those costs can add up a lot. So that's where you typically see the traditional method being applied. The proxy method, I would say, is the vast majority of SR&ED claims. And basically, and the reason why is right there. It's an overhead allocation. So whatever your SR&ED salaries and wages are, you add another 55% on top of that, and you get the tax credit on that as well. So you don't have to prove or justify anything, really. It's an allocation. So anything that's labor intensive, like software development or anything like that, where really your main costs are employee costs, then the proxy method is virtually always going to be more beneficial. And as I said, you can choose either way. I see some questions popping up. I'm going to keep going for now, and then Mo and David, we can flip back into them as we go. Materials, depending on your industry, materials are basically anything, well, any kind of material, so chemicals, prototypes, things like that, that are either consumed or transformed in your project. So consumed meaning they're rendered valueless, right? So if you build a prototype, so like a small scaled down version, that's never meant for commercial use, it's just going to be for testing. Once you've used it in your testing, it's going in the bin and it's scrapped. That would be consumed. It's rendered valueless, basically, as a result of your SR&ED. Transformed is something that is transformed into something else of value. The key to that distinction is if something's transformed and it's later converted to commercial use or it's sold, then there's going to be recapture on the tax credits you got, meaning you have to give them back, because the CRA will consider that on a net basis, you didn't actually incur any cost. You incurred the cost, CRA gave you tax credits, but then you sold that thing, that material, and you got revenue from it. So then they're going to want some of those tax credits back. But usually consumed is the key part. And you might see that in biotech. I know David can speak to that as well, where you might have testing. Again, I'm not a biotech guy, so you might have testing chemicals or things like that you're using in your development. Those would be examples of materials consumed. Contractors, subcontractors, consultants, those are people that are basically doing SR&ED on your behalf. So they're not employees, but they're doing the same work that your employees would be doing, but they're not employees. So they're contractors, and you're actually paying them, they're invoicing you and you're paying them. They have to be Canadian. So again, we talked about how this is a Canadian tax credit program. If you're going to use a consultant, they want you to use a Canadian consultant. So in order to get the tax credit, they have to be a Canadian consultant. They have to be invoicing you for their work, and they have to be doing the development work, right? That Mo has been talking about. The 80% there just means that you only get a tax credit on 80% of the cost of the contractor. It's pretty arbitrary. I don't know that it means anything. The Harper government a number of years ago brought that in, I think, just honestly as a little bit of a haircut to reduce costs to government, but that's what the Income Tax Act currently allows is 80%. Third-party payments, they're part of SR&ED, but they kind of sit on their own, and you might not see them all that much depending on the nature of your company. What they really are is basically if you contribute to UBC or SFU or another university where it's not your research, it's their research, they're driving the bus, but it relates to your industry, and you can exploit the results. So you get access to the results of that research and you can exploit it, but so can others. So it's not just yours, it's kind of more communal, but you've contributed some money to it, for example, to help support it. In those cases, you get the same tax credit on 80% of the cost. So you don't have to write up a project description like Mo is referring to. You just have to fill out a schedule within the tax return and you get the same tax credit. So you may or may not see those. So I know I've said a lot. Should we see what kind of questions there are, Mo? Or
I think so, Rod, because this is a very important slide as well on the costing side. So I'll quickly read them, and then if you can answer those, that would be great. And please, people that they didn't write them in chat, if you want to come off mute and then ask your questions, that's perfect too. So the first question from Ellie, is patent registration cost eligible?
No, so patent costs are excluded. Now, the R&D that you're doing underneath it could qualify. As long as it meets all the rules that Mo has been referring to, but the actual cost of applying for and registering patents is not eligible.
All right, perfect. So Will Fan asking, if salaries are affected by the pandemic and they were converted to subcontractors, is SR&ED flexible on that?
Not really. I think they are what they are, right? So they're either a T4 employee, in which case you would claim them as salaries and wages, and also get that proxy overhead that we referred to. Or if they're not a T4 employee, but you're paying them as a contractor, then they would have to be claimed as a contractor. Now, you could have an individual who's both in 1 year, right? So maybe the first 6 months of the year, that person's an employee. You would claim that half as salaries and wages. And then for the last half, you could claim them as a contractor. But you got to draw the line. So they are what they are, depending on the nature. And you raise a good point about, which I don't actually think is in this deck, but about COVID and things like that. So you could receive assistance, for example, or funding helping you. So SUS, for example, the emergency wage subsidy that was going on for 2020 and 2021. If you do receive things like that, if it does relate to your R&D and to the people performing that R&D, that could be considered government assistance, which would reduce the amount of expenditures you can claim. So just keep that in mind, that if you're getting funding of any kind from anywhere, really, you'd need to take a look to see, hey, what does it relate to? Because it might actually grind down the expenditures. You have to claim SR&ED on the net, basically.
Perfect, thanks, Rod. The other question that we have, excuse me, it's actually one of the questions that always come up, and we deal with it all the time, Rod. If a subcontractor is Canadian, but they are a global, but if a subcontractor being Canadian, but they have it's a global company, so I assume that they are doing development all over the world, right? Do they still qualify for SR&ED with a Canadian branch? And do they, if they pay Canadian branch, do they qualify for SR&ED as well or not? And I think that this goes back to if the development happens in overseas as well. So if you can justify that, that would be good.
Yeah, and the short answer is yes. So in general, if the way the Income Tax Act words it is they had to be a Canadian taxable supplier. So if it could be a global consulting firm, but if you're dealing with the Canadian subsidiary and they're invoicing you from their Canadian address, for example, and they have a business number and a GST number and all that good stuff, and they're performing their work in Canada and you're paying that Canadian entity, then that's fine. But if you're paying, Accenture in New York, then that's not okay. So it does depend on the case, but the short answer is generally yes. As the way the question is written here on the screen, generally yes. As long as you're paying a Canadian subsidiary, then that's okay. For work done in Canada, that's important.
Exactly. And that portion work done in Canada, it's important too, because sometimes CRA in an audit, they want to find out where that work happened by the contractors, right, Rod?
Yeah, exactly.
Thank you. The last question that we have on the chat is subcontractors, does that work have to be directly, I think Nancy meant related to the research?
Yes. So defining research, it has to be related to the development work. So that could be research, that could be experimental development, that could be basically all the stuff that Mo and David are going to refer to. So that technological work, it has to relate to that. If we expand the definition of research a bit, it has to relate to that.
Perfect. Thank you, Rod. Prayesh, I'm very sorry if I'm not pronouncing your name right. She is asking, do salaries for employees outside of R&D department qualify?
Yeah. So kind of the same answer that I just gave. It doesn't really matter what the employee's title is. If they are doing the underlying development work, you can claim a portion of their time to do that. Now, you kind of have to look at who that person is, what their expertise is. Like if you're a CEO who is an accountant, for example, like me, and you're trying to claim 90% of his year performing R&D work, yeah, that might not fly because that just kind of doesn't make sense, right? An engineer would be doing that, not an accountant. So you do have to look at the reasonability like that, but they don't have to sit in the R&D. There's no hard and fast rule. It's what work are they doing? What's their role? Yeah.
Perfect.
I'll jump to the next one, which I see about materials.
For sure.
It does not have to be bought in Canada. No. So it has to be consumed in Canada. So when I talked about it being rendered valueless, the shred you're performing on that material has to happen here. Where you buy the material from doesn't matter. It's only your contractors that really matter. Anything else you could buy it from anywhere, and it doesn't really matter.
Awesome. Thanks, Rod. I think that was all the questions.
Okay.
So going to the next slide.
Where are we? We're at 117. So I'm going to kind of go through this because it's just kind of expanding a little bit on the definitions of salaries and wages and that we just kind of went through. But basically what you see on the screen here is some examples of, the labor has to be directly engaged, right, is the term that the CRA uses, which basically means you're doing these sorts of things. You're preparing for experiments or analysis. You're actually performing those experiments or analysis. You're doing any of the support work listed here, like engineering, design, research, mathematical analysis, computer programming, data collection, all of that type of work all qualifies. Technological feasibility studies, and as we have here as well, and this kind of relates to the last question we answered, or the non-specialized employees. So, they don't have to be an R&D person, but they have to be physically, or capable of performing the underlying technical work and probably supervised by somebody else if they're not one of those people. Mo, and maybe we can quickly go to the next one.
For sure, Rod, we just had one question popped up.
Yeah.
I think that's related to other government assistance. So can I stack SR&ED with wages that are already subsidized 50 to 75% by other agencies?
Yeah, so SR&ED doesn't really care about stacking. Sometimes other programs do, like certain other grants and incentive programs might actually specifically state that you can only have 75% or something of your expenditures covered by various governments. SR&ED doesn't have that specification. What it does, though, is if you, like, as I said, if you're getting a grant or funding from another agency or somebody else, SR&ED will want you to grind your SR&ED expenditures by that. That's where SR&ED has to. So again, so there's no specific percentage, but it will want to reduce your expenditures for any funding you're getting that relates to your R&D. So just one quick expansion point on that. So we talked about things like capital equipment not being SR&ED eligible. So let's say you get $1 million funding. If $900,000 of that million relates to you buying capital equipment or buying a new building, things like that, those costs wouldn't be SR&ED eligible. So you don't have to reduce your SR&ED claim by that 900,000, just by the 100,000 that relates to your salaries. So it's just things like that to keep in mind.
Sounds good, Rod. One other question just came up. Labor includes the recording and updating the notes for research and learning increased skills for R&D for your product testing. So I assume that means that the documentation that needs to be that needs to be developed and kept, and that can be given to other employees. Can that be qualified for SR&ED?
I might throw that one back at you, Mo. I would say probably, but I'll let you answer. It's probably a bit more.
For sure, yeah. So the documentation is part of the requirement. So if you have to create those documents for the training for the new employees, and that's part of talking about your learning that you gain from that SR&ED project, what worked, what didn't work, going through the iterations, going through the technological uncertainty and the research that has been done. Absolutely, those costs would qualify. All right, another question just came up. Could you touch on SR&ED and IRAP specifically? Rod, I can take that, or you can take it. Up to you. I think.
Yeah, I'll start, and if you want to add to it,
sure.
Free. I think generally my answer would kind of be the same. So IRAP would be just like any other funding in terms of SR&ED. If IRAP is funding you for a portion of your R&D that you're then going to claim for SR&ED, you'd have to reduce your SR&ED expenses by whatever your IRAP funding is, basically.
Perfect. And Anthony, I just wanted to add one last thing. I like a lot of my clients ask, oh, should I just focus on SR&ED or like only IRAP or what? No, the best case scenario and the way that you minimize the amount of R&D expenses that you will have like for your project is to apply for all of these together, right? So apply for, if you qualify for IRAP, if you qualify for digital media tax credit, SR&ED, all of these ones, apply for all of them. So hopefully that answers your question. All right, no more questions here. So next slide, which is the supervisors.
I'll be really quick on this one. So this is just to highlight the fact that everything else we've talked about has been the people that are directly engaged, right? The people performing the coding, the people doing the actual direct R&D. But you can also claim what's called the first level supervision above those people. So, and that's kind of what this slide is referring to. So these would be people that aren't directly doing the R&D, but they're providing that first level of supervision to the people that are. And that's a qualified activity as well. So managers, people like that that are performing the supervision, you can claim their costs for the portion of their time doing those activities. But don't forget about those people too. Contractors, again, I think the key here really honestly is they have to be Canadian, they have to be performing their work in Canada, and they have to be doing SR&ED for you. So similar to the directly engaged for employees, they have to be doing that technical work. You know, things like IP, I won't really go into that in detail because it helps if you control the IP, but it's not a requirement. So don't necessarily worry about that too much. Obviously they have to have invoices. They have to be a legitimate consultant who you're paying an expenditure to. The only thing I will touch on other than that really right here is the owners, because sometimes we do see where the owner isn't an employee or is not an employee, but is a sort of a contractor to his own company or her own company. That is still eligible, but gets a little bit messy because you're considered for tax purposes non-arm's length, which allows manipulation because you own the company. And CRA never likes anything where there's potential manipulation, so they put all kinds of rules around it. So it's beyond, I think, the scope of this call to get into it, but just keep in mind it's still eligible, but there are some restrictions around it and as to where it can be claimed, how much can be claimed. So I'd be more than happy to provide any help or guidance on that. If anybody has any questions on that, feel free to reach out sort of offline, but just keep that in mind if there is a situation like that.
Awesome, thanks, Rod. So David, do you want to take it over and talk about like the way that we help our clients apply for SR&ED? And then the examples, please.
Sure, yeah, absolutely. So generally speaking, there are several steps. So the first step is usually for us to meet with your technical team, right? So that we can tell them a little bit more about the SR&ED program, what we're looking for. But most importantly is for us to learn the technical work that was done within the fiscal year in scope. Because as you can see that, SR&ED is kind of intricate, and so that's why we're here to help you decipher and identify what work can be considered SR&ED eligible versus not, right? So that's why we would have those scoping interviews to meet with your team. And then secondly, we will also gather costing or financial information that are associated with the SR&ED work, right? So that we can prepare the financial portion of your SR&ED claim. So now having both the technical information and the financial information, we will do the heavy lifting for you, where we create what the CRA calls a project description. So basically it's, if you think about it, it's kind of like a technical report, right? Where we showcase and summarize in written paragraphs, mentioning, your work and how it is SR&ED and what did you do throughout the process, basically to try to meet those three criteria that Mo previously mentioned, right? And so that's one part of it, that's the technical side of it. And then as well as there's costing tax schedule that we have to prepare to that corresponds to the SR&ED work that was performed. So after that, we will of course draft everything out for you. We'll send it over to you so that you can review it to make sure what we prepare makes sense and it's everything makes sense, everything is correct, so that we can file the SR&ED portion along with your tax return.
Awesome. And David, as far as the examples, let's quickly go over them since we have only 4 minutes actually.
Okay, awesome. Yeah, so again, so these are, some most commonly seen examples, right? So it's it's not an exhaustive list. So in terms of IT, nowadays there's a lot of people trying to build machine learning models and prediction models and AI and whatnot. And like Mo said, there are a lot of algorithms out there publicly available, but you can't just use it out of the box, right? You have to, if you use it out of the box, it doesn't necessarily achieve the goal that you try to achieve, right? So maybe you need to do some R&D to figure out, how to piece things together. If like k-means or LDA or genetic algorithm, they don't work individually, and you need to kind of, amalgamate them together and try to build an algorithm that works for your case. That could potentially be considered a shred. The other thing is security, right? So there's a lot of data security tools out there, or authorization and things like that for like OAuth and Auth0 and JWT and things like that. But maybe during like data transmission or something, it would potentially expose some sensitive data, and your requirement is to make it 100% accurate and 100% secure, right? So these publicly available tools won't allow you to do that. So you need to do some R&D on top of what's publicly available. So again, that's something that could be potentially shred eligible. And lastly, something that's very common, which is performance and scalability, right? Like most previously mentioned, right? Like publicly available tools may only let you process maybe 1 million data points per second, but it is your requirement to process maybe 10 million, right? So how do you do that, right? Like you have to build something on top of what's what we call a standard approach. So that type of work could potentially be eligible as well. So on the other hand, there's other scientific research in, say, in biotech and life sciences, right? So say a good example would be formulation for like cell culture and transfer media. For example, like DMEM plus FBS plus interleukins, that's a standard approach, but it takes a week or so to grow your cells, or the viability is not as high as you want, right? So you're trying to build something on top of that, the common practice. And then another example would be, say, antibody and antigen generation. There's a lot of known practices, right? Like xenomel, xenograph, and all of that. But the level of monoclonal antibody purity, it may not be as much as you want, or it takes like 3 months to grow them out. But your requirement is to grow them out in like 2 weeks or something, right? So you're trying to devise something that is beyond standard approach to try to achieve your goal. And then lastly, for drug discovery, you might have a good drug candidate, but then during the compounding process, where you make it into a pill, it might kill the efficacy or effectiveness, right? So that negated the potential of your discovery, and you're trying to come up with a new methodology for compounding and increasing shelf life and whatnot. So that's also another example of shred eligible work.
Thanks again to EY. Thanks everyone. Otherwise, yeah, have a great afternoon, everyone. Thanks again.